Hey everybody, Brian McGough here, sector head of the retail team at Hedgeye. I'm joined in the studio by Jeremy McLean, my partner, and we have the pleasure of having Marc Cohodes online with us as well. Marc is of long and short selling fame, and we just got to address the elephant in the room right now. Marc was on, not a few weeks ago calling for the collapse of FTX, and he absolutely nailed it. It's probably been one of the best calls that Marc's made. Marc, not to take away from all the other amazing calls you've had. The thing I like about Marc is he thinks big. He doesn't talk about, stocks trading up, down, 10, 20%. That's not where Jeremy and I live either. We look for the really big calls, stocks that are going to double and then double again and double again, and names that are trading at atmospheric multiples that are going to get cut in half again, and ultimately go to zero. So we got some great press last night, we as in Marc and Hedgeye as well. So we're going to cut right to the tape and show that to you, and then let Marc talk for a couple of minutes about his incremental thoughts on FTX. So let's cut to the tape.
One of the few who did pay attention was a short seller called Marc Cohodes, who took one look at Sam Bankman-Fried, SBF for short, and recognized here is a con artist, obviously. Watch this tape, which aired on Hedgeye TV, a small investment advice channel, back in October.
When anyone tries to pin SBF down on where he made his money, you can't get a cogent answer. Then you take into account that SBF is bailing out known Ponzi's and frauds in the crypto space. Everyone who's gone bankrupt or is a proven fraud. But nothing here fits. Everything reads like this thing is a complete scam. And I think this thing is dirty and rotten to the core.
So if that guy on a small audience investment channel could tell that Sam Bankman-Fried was a fraud, where was Gary Gensler of the SEC?
So Marc, what do you think about that?
I'm glad Tucker did a good job on that. I thought he did well. And, again, I give you guys and I give Keith credit for having me on. I'm an outspoken guy. I'm not everyone's cup of tea. As you say, I swing hard and I swing big, but I'm not short of opinions, but I base my opinions on fact. And I look all right on this FTX call. It was a pretty big deal. It's a pretty big call. And it's kind of sad that so many people lost billions and billions, but the mainstream media here has a huge problem. And they have a huge problem now, still, because they haven't told the real story. And again, you guys don't pay me a dime. I don't pay you a dime. No one's captured here. I think it serves the public really well, and you guys have done a fantastic job in how you do it. You don't always get it right. And again, you're not for everybody, but you guys put it forth. And for the people who are, watching or listening today, these two really bust their ass. I mean, there were times when the market's all fucked up and they would literally call me on the weekend and say what do you think? And I give them my 2 cents of how broken and how silly and stupid the markets are. And these guys think, and I pride myself as wanting to think, and I think things through. But most people nowadays just don't think. They look at charts or movement or a recent story. But I think if you can think things through right now, I think bigger picture, you're going to be in great shape, in the next 3 to 12 months. Or we'll do this back in a year and see how I did. So I'm 1-0 on FTX. I think Silvergate goes to a number very close to zero. That's symbol SI. It's been destroyed this week since I spoke about it. They have all sorts of issues that they're covering up, and it's not that hard. But I love what we're going to talk about today. And I'll just say before we start, I'm long Overstock, OSTK. I'm long Camping World, CWH. I've been long these stocks for a while. I think the stories are better. I think the stories are great. And I'm short Helen of Troy, which I think is a complete piece of shit, run by someone who can't touch his ass with his hands. And I'm short Wayfair, which is a complete leverage piece of shit, where the guy running it is a complete clown who can't ever do a number that he claims he's going to do. And he's misleading the investment public in a significant way. So I'm short Wayfair. I'm short Helen of Troy. Dollar-wise, give or take, I'm long the same amount of Camping World and Overstock against it. And I will say that when we come back here in 1 year, Overstock and Camping World will be trading higher than Helen of Troy and Wayfair. So Helen of Troy, give or take 100. Wayfair's give or take, who knows, 35. It's volatile as hell. But I'm long two guys who I think are outstanding, and I'm short two guys who I think are going to fail and fail miserably. So I'm not, unlike FTX, where I had no position, I was doing that to get this scumbag out of society and his crew. I was doing that for the better good of the world. This is investment stuff, and this is where I think I've spent an inordinate amount of time on all four of these names.
Well, just back to the whole crypto call. What do you think happens from here? Just in the crypto world, what are the implications? And there's a lot of companies, even Overstock, that we're going to talk about, and it's not linked to crypto; it's blockchain. Big difference. But there's a lot of names that are dinged with this association with blockchain. Where do you think, or with crypto, blockchain, anything that's complex for the ordinary investor to understand, just in layman's terms, where do you think the crypto market goes from here?
Okay, that's a good question. I've never touched a stick of crypto. I think I said, whoever will listen to me, that FTX really isn't a crypto fraud. It's a Ponzi scheme. It's a money laundering, accounting, complete fraud. It's wrapped in a crypto label because crypto is unregulated and people can get away with stuff in crypto. But FTX's failing really didn't have to do with crypto. It's a Ponzi scheme. It's money laundering. I think there's foreign influence involved. So that's that. Crypto in general, I told people, and I feel strongly about this, do not have a dime of your money in any offshore exchange. I think they're not safe. They're not regulated. They can vanish. They can seize your money. They can stop withdrawals at any time. So if you have a dime of your money in any of these far-flung exchanges, get it out of there. Get it out of there quick. That's what I would do. In terms of crypto going forward, whether or not there's a place for crypto in the investment world, smarter people than me will figure that one out. But I think it's been wild. I think it's been reckless. I think it's been speculative. I think that'll come to an end. It's really up to the mainstream media, and it's up to the regulators, and it's up to the adults in the room to call this shit for what it is, rather than this profit enhancement scheme for a few where the majority gets screwed. I mean, people need to understand what they own. Again, if you can't explain it to a 10th grader in a paragraph or less, you probably shouldn't be involved. So overall in crypto, I just don't know. I think this FTX scheme is the tip of the iceberg. I think there's foreign interests involved. I think the ringleader of this was a guy named Dan Friedberg. I think there's going to be plenty coming on that crook. He was involved in a poker scandal before. I think he's sort of the mastermind behind it. I think SBF is the useful idiot along with his players. I don't think this is about young people engaging in drugs or orgies or bullshit like that. That's a media circus. I think these were useful idiots in an unaudited scheme that had uncontrolled billions of basically folks not knowing the first thing of what to do. And it's okay to question things. It's okay to speak truth to power. And this was a huge, huge failing. And no one wanted to hear what I said because my questions were simple. My questions were basic, but my questions couldn't be answered. And when you can't answer a guy like my questions, it tends to get problematic in a hurry. Because as I say, I don't let go of the rope, and I sure don't fucking give up. And I'm not giving up. I'm not giving up on Silvergate. I'm not giving up on stuff I'm involved with until I think it's done. So FTX, it's the tip of the iceberg. I've talked to some of these media guys in the mainstream media. I still think, by and large, with the exception of Gretchen Morgensen at NBC and a couple others. I think people are very confused. They don't know what to believe. And I think SBF and FTX's handlers, or paid flacks have done a wonderful job of confusing people. But shame on Brady, shame on Kevin O'Leary, Cartoon Network, all these enablers, Scaramucci. I mean, they should be ashamed of themselves, and a lot of them, depending on what they know, should be brought to justice. So we'll see how this all goes.
Yeah.
Time will tell, and at least now people are on it. And Tucker did a good job last night on Fox, I thought.
Yeah, me too. In a self-serving way, having us had you on here, that was a beauty. So let's maybe transition into some stock ideas here. What is I see you tweet. I watch all of your tweets. I don't follow many people. I follow you. You're
smart.
I try to ignore the noise. You have been tweeting a lot over the past couple of weeks. I'm up to no good. What does that mean?
Yeah, I'm up to no good. Well, I was up to no good on FTX. We all found out what that works on. I'm up to no good on Overstock. I mean, Overstock to me at 23, 22, 25, wherever the fuck it trades at, is an absolute gift. I mean, it is a gift. And here's why. They have no debt. They're not burning cash. They're generating cash, albeit not that much. They have $9 a share in cash. Stock's 23. I'm deeply involved in something called T0, which they own roughly 55 to 60% of. I brought in personally the new CEO last February, a guy named David Goon, who worked for ICE, which runs the New York Stock Exchange. Goon's a 60-year-old man. He walked away from $5 million a year to leave ICE to run T0. Now, Goon got, I got full here, let's just say 5 to 7% of the equity of T0 to run it. And he makes a very modest salary, let's say under $500,000. So this guy walked from $5 million a year to go run T0. And in exchange for this equity, he told me he thinks personally his equity is going to be worth $1 billion, which puts the value of T0 somewhere near 15 billion, 15 billion. And let's cut it in half. Let's say it's worth 7 billion. Let's say it's worth 5 billion. You can buy all of Overstock right here, right now for $1 billion with 400 million of cash, plus T0, plus something called BIT. And everyone will say, what's T0? Well, T0 is a digital exchange that is SEC approved. It is FINRA approved. It's the only one that has this. It's the only exchange that's approved, and it's domestic. So since they rang the opening bell of the New York Stock Exchange in April, every one of the people who could theoretically walk in or parachute on top of them is out of business, including FTX. And competing with a criminal operation that has unlimited funds to get in your pants is a problem. But when the only guy who has approval watches its competition go under and go away, that's a huge plus. So I will take David Goon with ICE owning 20% of it, Overstock owning 60% of it. I will take him any day of the week to run an SEC and FINRA approved digital exchange. And what's digital? Digital security tokens. Digital is private companies that you can tokenize. Digital could be baseball teams or football teams or soccer teams or art or real estate or things like that. It's coming. You can't stop it, but they are the only game in town. So while everyone's focusing on all these criminals who are now out of business, there is one man left standing, and that's T0. So when you buy a share of Overstock, you get 55% or 60% of T0, which isn't nothing. So then you look at Overstock's base business. And their base business is going to be down roughly 30% this year. in line with everyone else, actually better than some, but they're making money and they're generating cash. And no one else is making money and no one else is generating cash because these guys are very tight on costs. And when things suck, as they do in this economy, because of oil, because of rates, because of recession, because of whatever you want out there, my message to Jonathan Johnson, who's the CEO, is you can only control what you can control. The uncontrollables you can't touch. But what you can do is when times get tough is you batten down the hatches, you husband cash, you generate cash to the extent you can, and your competition, which happens to be highly leveraged, Wayfair, Bed Bath, At Home, which is private, and others, when things change and or they go under, there's 20 billion plus folks out there up for grabs in this vertical. And 20 billion is Wayfair's revenue plus Bed Bath revenue plus At Home revenue. And two, if not three of those three are going to go out of business and or be so distressed they won't be able to function. And when that's the case, you ask yourself, what percent of this business is Overstock going to take? Well, 10% of their business, if they take 10%, it doubles their revenue. And let's say over 3 years, and then you go from there. Do they take 20? Do they take 25? Does someone pick Overstock off and use the Overstock engine to grow with them? I mean, if it came out tomorrow that Home Depot or Lowe's or Target were to buy Overstock at $47.50, $52.80, whatever per share, and they're going to drop $1 billion to grow market share, where would Wayfair open? $4? $5? Because Wayfair, the dirty little secret is they have all this so-called zero-cost debt that they're going to have to roll over. And when they roll it over, instead of paying 70 basis points of interest, they're going to have to pay 12% or 1,200 basis points. So Wayfair is between a rock and a fucking hard place, and they can't get out of it. And the guy who runs it, Niraj, is just a pathological liar. He's never made a number. He's always missed. And I think they've lost $3 billion since they've been in business plus, and he has a mountain of debt. So I think Wayfair is in desperate shape. I think they're where Bed Bath was a year ago. So I think Overstock's going to take huge share from Wayfair, huge share from Bed Bath. Bed Bath's on death's doorstep, and share from At Home. So at $23, $22, you get $9 of cash, you get T0. They have other Medici assets that I like a lot. You have a management team that, as bad as business and economy is for their vertical right now, what you see is what you're going to get. They're not going to do worse from here. If anything, things get better and the compares get easier. But it's very, very, very difficult to run business when you're so highly leveraged, when the economy is bad or may get worse, and you're competing with an unleveraged player like Overstock. So Overstock to me is where Best Buy was many years ago when they put Circuit City and Fredder and Highland Superstore and The Good Guys, Newmark and Lewis and Crazy Eddie, all those guys out of business. So I like Overstock a lot. I mean, I like it a ton a lot. Johnson bought stock for himself the other day. I think there'll be more insiders buying. So can it go lower? Sure, it can go lower. Can it go to 20? Sure, it can go to 20, but it's not going to trade at cash. Cash is 9. And I think T0, whenever, T0, all their competition's out of business. Overstock, all their competition's going out of business. So one day the market's going to do better. One day people are going to be in the mood to buy stocks. So you're going to want to own this now. And at any point in time, lightning can strike and someone's going to wake up and buy them. So there's a lot of ways to win here. I got it hedged off against plenty of Wayfair. I got it hedged off against plenty of Helen of Troy. And those two things are over-leveraged, complete pieces of shit. You don't have to be short either one of them, but you need your head looked at if you own them. You need your fucking head looked at to own either one of those stocks. So that's my Overstock view. But make no mistake, I like it a lot. I like it a lot. I don't give a fuck on the Christmas quarter, but I think next year the numbers are going to turn out to be too low. The number, I think, when Overstock ends 23, whatever the estimates were going into 23, they're going to end 23 with the estimates higher. That's my view.
Yep, that's a big statement. We actually had an institutional call with a client who was looking at Wayfair versus Overstock, saying, "Hey, why can't Wayfair just downsize its cost structure and become what Overstock is right now as far as profitability?" Jeremy, I thought, had a very good answer for it. Jeremy, maybe you want to give your 2 cents on that.
Yeah, I mean, from a high level, they run a similar business, but I think, you're probably very familiar with this, Mark, but Wayfair, right, basically gained market share by running this business, losing money, right? And in an easy money environment with ridiculous, valuations out there at these kind of growth companies, and paying so much in stock-based comp and underpaying their executives. I think you talked about the ICE CEO's salary. I think the CEO salary at Wayfair is $80,000, and they pay all their employees so little in salary because they can use stock-based comp and add that back to adjusted EBITDA, and that's just dilution. It's not it's not real cash flow to them. So it's easy to take market share from someone like Overstock in that environment. But I think the punchline is that environment's over. Right, and to Brian's point, like we think you could potentially run Wayfair as a profitable operation, but it's going to be much smaller than it is today, and I don't know if that valuation that would therefore deserve is going to be in excess of the $3 billion in debt it has. So, think very much the equity value is still under pressure there.
Yeah, I mean we've been short this thing since I think 280, Jeremy. It's now at 42. Maybe I cover it at 10, but by the time it gets down to 10, we could be looking at an equity offering, which ultimately is very dilutive and takes this thing closer to zero. So very, very bearish on Wayfair here right now.
A couple things I might add on Overstock that we did a presentation for our subscribers on this about a year and a half ago. If they want to hear a little bit more about T0, we spent at least half of our presentation talking about that opportunity. As Mark was indicating, I think it's really unique opportunity to sort of do tokenized securities and have pieces of the market that are normally controlled by Wall Street, essentially, like IPOs, where it's just the wealthy institutions and the big wealthy investors that get to partake. It would much more democratize, getting early investments into unique business opportunities. But so people can refer to that if they're a subscriber. Another piece, right, like the sort of separation of those blockchain assets out. The company's much more focused on executing e-commerce, and this is a company that's been around since the '90s, right? It's not like they haven't seen a cycle before. It survived that cycle. It still exists today with operating profitably with a significant revenue base, while Amazon has apparently dominated the industry. Which if it hasn't put out Overstock out of business yet, it's probably not going to. And as you just covered, Mark, there's going to be a lot of market share up for grabs here. We think in the coming 2 to 3 years with how some of these home furnishings operations are operating today.
Yeah, I mean, I'll further add that Wayfair is really on the cycle of death, because if they stop spending, and the only reason they got as big as they did, as you said, is they spent a shit ton of money to grow unprofitably. They stop spending, their sales will collapse. They stop advertising, their sales will collapse. They can cut headcount, and then it will collapse. But they're the high cost guy in a low cost world where sales are under pressure. So when things hit the fan and investors realize that Niraj is a pathological liar, which he is a liar, they're not going to be cash flow break even Q4 of next year. There's zero chance. And when people realize how fucked against the wall they really are, I think then that people will realize that the Overstock model is the model, and Overstock's going to absolutely crush them, and they're going to crush other people. And frankly, there's too many people at this. There's too many people in it. I mean, Overstock is number 4 in the space. Wayfair's number 2. Target's number 5. don't think for a minute 4 and 5 can't get together and basically take out 2, take out 3, and then it's just basically Overstock / Target versus Amazon. And Amazon isn't that strong there, but at home, which is highly leveraged, Wayfair, which is highly leveraged, goes against a very lean Overstock, and Overstock is where you want to be. And you got the cash and you got T0 and you got the other stuff. So I like it a lot. Very, very, very tough, different world. And if the world gets better, Overstock will more than do its thing. So,
Mark, it sounds like the range of outcomes and where the price could go with Overstock, like you could drive a truck through it, and that's probably based on the value of T0, it ultimately being monetized. My sense is that if Home Depot or Lowe's or Target were to require it, I would love your gut probability on that happening. But also, do you think that they would spin off their share of T0?
How do I answer this one well? Probability, I think the probability that someone buys them if the stock stays here is beyond high. I think it's going to be the first thing that goes once people realize that the world's not ending. I think between Target, Lowe's, or Home Depot, any one of them could take them. I think Medici does get spun off to shareholders. Understand that ICE, which is Intercontinental Exchange, is based in Atlanta. Home Depot is based in Atlanta. Arthur Blank, who used to be or is a factor at Home Depot, is also involved in the Atlanta Falcons, which is football. He's involved in soccer. Maybe T0 gets involved in tokenizing football teams or players or soccer teams or players. I think there's a lot of good things that can happen, a lot. And I think next year is going to be the year. I won't be happy at whatever price something happens if it stays here. But, it is what it is, and the world is different and the markets are completely broken. But if we can get it back to where people really think, they think and they say, look at the balance sheet and look at the income statement together. Balance sheets matter, income statements matter. And if I say nothing else today, this is very important. Normally in a vertical, let's say like generic drugs, everyone is fucked up. Everyone had really bad balance sheets there. And a lot of those companies went out of business because of opioids and pricing and other things. Concordia went out of business. Lynette's going to go out of business. They're all going out of business. No problem. But in this online home furnishing vertical, you have everyone way too leveraged. At Home, which is private, is leveraged. Wayfair's leveraged. Bed Bath's leveraged. All these guys are leveraged. And they're competing against an unleveraged Overstock. And an unleveraged Overstock to these guys is dangerous. And it's dangerous because they will not go out. They will get to the other side of the Grand Canyon while everyone else is going to be eaten by fucking coyotes at the bottom of it. Johnson, who runs it, will get to the other side. He will get to the other side. I'll guarantee you that one. Because as many people who have tried to put Overstock out of business over time, they've all fucking failed. And there's a whole list of bodies who failed. But Overstock never failed. And given the leverage of the Wayfair, of Bed Bath, of At Home, right? If Overstock takes the share, I'm thinking, and it begins to happen, the stock will be enormous. And I'm not the only guy in retail who knows and thinks this, because they know how big this vertical is. And you saw Tempur-Pedic do it in mattress. You saw Tempur-Pedic take out Sealy way back when. And Tempur-Pedic basically is consolidated mattress. And I have no position in Tempur-Pedic, but you have to admire the cocksuckerness and the motherfuckerness of Tempur-Pedic and how cold-bloodedly they took these guys out. And they took them out. They took them out at the lows and they consolidated, and they have the brands. They have Stearns & Foster. They have Sealy. They have Tempur. And they can also take more. And that's a vertical where guys were leveraged. They were messed up, and Tempur was the operator. And when Tempur went public, way, way, way back when, right, they were the smallest guy. So it happened with Tempur and mattress. It happened with Bed Bath and consumer electronics, and it's going to happen with Overstock and Home Vertical. You just need to have patience, you need to have sense, and you need to think it through. But Johnson's a motherfucker. I mean, he's a Mormon, and they're in Utah, and he may come across as folksy. But I've talked to that guy at 2 a.m, and I've talked to him at 4 a.m. I mean, he's a worker, and he takes this shit seriously. So I like it. I just don't know what else to say. And there's a lot of outcomes where you can win. And you know, losing's like this is. Just drifts for a while, but it's not going to drift for long, in my view.
Regarding your take on Niraj Shah, I just would add a thought for people that, you know, Niraj is saying they think he can get profitable within a few quarters in terms of managing costs, while the CFO that was sort of the adult in the room and people trusted that brought this company public just left. Right? He's retired and gone, and I would argue he probably knows how hard it's going to be to get this to profitability in a consumer downturn, and doesn't want to have to be the one to fire all those people too. So there's a different financial leadership there.
Niraj is just a pathological liar. He's just an absolute liar. He's never been able to make a number, and he's not going to do it. And if he told the truth, his stock could be down 80% from here, and the banks will end up owning it. But there's no way out for him. I mean, they can play their games, they can squeeze shorts, they can do whatever they want to do. They can talk folksy, he can talk big, he can use big words that people don't understand. But hell, SBF did that. But you know, Wayfair. I mean, the die is cast for Wayfair. In my view, they're in real trouble. Real trouble.
All right, I'm just going to add that if anyone tuning in has any questions, you can put them in the chat box there below the video player. Please upvote those you like the most. We are going to keep the comments, I think, to the consumer names that we're talking about. Maybe some on FTX if there's highly voted ones. But you know, so right now I just see the top questions about Enovix, which I know you've talked about a ton, but not one we're talking about here today. So people can refer to your Twitter feed probably to get your latest thoughts there. I know you're talking about it plenty. But Brian, yeah. maybe we change tickers here.
Yeah, so I want to talk Helen of Troy, because I first heard the pitch on this when you and Keith were on a month ago, and I was like, oh, maybe this is Mark being Mark, a little bold, and the story can't possibly be that bad. And then I spent like 3 full days of my time on that model, going through the accounting and the non-GAAP versus GAAP earnings, and it blew me away. This is a company that owns brands that, most people know about, but are they great brands? It kind of reminds me of like what Newell was like 20 years ago, except with a lot more leverage and worse management. I think, as you appropriately put it, Mark, this is a company that's great at buying average companies at peaky multiples mid-cycle. As a matter of fact, over the past two years, a bottom at the top of the cycle, which is even worse news. It's not good at running brands. They're good at using a free money interest environment and buying things and letting them run on their own and running very poorly and losing share organically. Let's not even touch on the fact that the consumer is absolutely slowing right now. We saw it with Target's numbers, and Target's a good company in the grand scheme of things, but it's not immune to macro. And, we saw it with a few other companies like WSM last night. They missed by a penny. Who the hell misses by a penny? You can't find a penny on the P&L. That thing, I think, is just, while we're talking about the home space, I mean, that's a name where the street's underwriting $15.75 in earnings next year. I think I'm getting to about $8. So I think that's a great short. But with Helen of Troy, I see a lot of parallels in that this is a company that its core competency of using free money to buy things and then manufacture non-GAAP earnings into an adjusted EBIT number that people actually believe and they put in their models is now coming to an end. So I know I just parroted part of your thesis because I believe in it. I think it's spot on. You had an old wall firm who came out yesterday with the buy rating, $120 price target on it. I just laughed at it. I mean, the stock has rallied over the past couple of weeks, and we're just hitting a point whereby you get Depot and Lowe's, where these guys sell a lot of their products into, especially the outdoor retailers like with Osprey and Hydro Flask. These guys are just losing share left and right. They're going to comp negative in the fourth quarter. They're going to comp negative in the first quarter. They're levered up. They can't buy any more deals. They can't manufacture any more earnings. I mean, tell me, what am I missing? Like you've gone through the accounting on this thing.
You're actually being kinder than me. I don't think it compares to Newell at all. I think it compares to that fraud Sunbeam. I'm not calling Helen of Troy a fraud, but if they keep it up, they are, because I think the way they're fooling people and the way they're trick fucking you on this gap, non-gap, I think there's elements of fraud in that. And if they want to push me on it, I'll expose this piece of shit for exactly what it is. Here's the problem, and it's a huge problem. The problem is they're in the middle. They're in the middle of everything. They have huge competition above them. They got competition below them. Retailers are going to have fewer and fewer SKUs, and they don't need them. There's nothing Helen of Troy sells that anyone needs. In terms of GAAP, adjusted GAAP, cash flow, they have no cash flow. They don't generate cash, and they have roughly $1.3 billion in debt, and they can't take on any more debt. They're maxed out. And their debt is variable, so every time interest rates go up, their debt goes higher. And as you said, it costs money to run these businesses, and there's no synergies here. You know, Newell, at least you could say, is home related. This shit's all over the place. It's anything from backpacks to curling irons to thermometers you put under your arm to all this various bullshit, and no one needs their fifth Braun shaver. No one needs their fifth Braun coffee pot. If you have one and things are tough, you're not getting another one. You're just not. So I think they have a SKU problem in terms of retailers are going to stock less. I think they have a door problem because I think there's going to be fewer and fewer retailers, a la Bed Bath & Beyond. I think they have a management problem because they're going to lose credibility with the few imbeciles they have actually recommending the stock, like Canaccord. And why do I say that lady is an imbecile? She uses wrong cash flow. She uses wrong GAAP. She uses wrong assumptions. Everything in her report is wrong. It's almost like it was given to her because the company is so desperate for money and doesn't generate cash and burns cash. There's a real problem coming up here. There's a real problem. And the problem with roll-ups is there's always a last deal, and they have no capacity to make another deal. So if the company doesn't make another acquisition, and they can't, at least right now, I don't think they're ever going to comp up again because it takes real money to grow and or maintain share. It takes real money, and these guys don't have the cash to spend to power these brands. And they have 180 plus days of inventory into a slowdown, into a bad balance sheet, into too much leverage, into rising rates, into a stuck consumer, and into street numbers, which are ridiculously high. So without the Chainsaw Al fraud element of Sunbeam, this thing looks like Sunbeam, which sold Me Too brands, you know, like Coleman and all this other stuff, into mid-market. And mid-market right now is the last place you want to be. And, you know, I'm friends with Brian Cornell. Brian Cornell and I go back to when he ran stores at Safeway. And because we're friends, I never traffic in Target stock, ever. And we never talk about any business or any names, ever. But what we do talk about is business and how the markets work and how retailers position themselves and how people think. And I will tell you right here, right now, middle is death. Middle is the last place you want to be. The last place you want to be. High is okay. Low is okay. But middle, you're dead. And everything Helen of Troy sells is middle. Everything is middle. And they do not have the management talent
to pull this off when each and every one of their businesses is down. And if they go and try to sell these businesses, their businesses are not worth the debt. So you want to pay $100 for this thing? Go right ahead. We'll come back here a year from now. The stock will be somewhere between 12 and 28, maybe $30, because they're going to very, very, very shortly hit the wall. And when they hit the wall, they're going to have no answers for anybody, because for all the pocket accountants out there, when you make no acquisitions, very soon GAAP and non-GAAP cross. And they're not going to cross at the non-GAAP number of 10. They're going to cross at the GAAP number of 2. So 10 times 2, if you believe it, is 20.
Yeah.
15 times 2 gets you to 30. And I don't even think GAAP-wise they're going to do 2. The street could be at 4. I don't give a fuck. I mean, the people following the stock XU are dumber than a bag of rocks, and I wouldn't trust them walking my dog. So I think this thing is leveraged. I think it's way too high. I remember when the stock was 3, and there's nothing fancy about a roll-up using cheap money. There's nothing fancy about it.
What do you think about management here, Mark? What do you think about management?
I think
you're a very big management guy.
I think management at best here is below average, and that's being kind. I think the guy on a conference call talks folksy. He talks in circles like SBF. He has no answers. He has no plan. No plan. And instead of saying, look, folks, we may have bitten off more than we can chew, and our debt is a real problem, but we're going to conserve cash. We're going to try to pay down debt. We're going to do things to run these businesses. And I think the compare here is Tupperware. Tupperware now has a major fucking debt problem. They have a very similar balance sheet to these guys. They have the same boob-like management. And now all of a sudden, Tupperware at $3 to $4 to $5 has a real leverage problem. And Helen of Troy has a leverage problem. They put out an 8K a couple of Friday nights ago where the banks are giving them some room on covenant relief for supply chain, but these guys are right up against their covenants because they're generating no cash. So generating no cash with $1.3 billion of debt, with 6 months worth of inventory into a slowing consumer in the middle of the market, having acquired all this bullshit at big prices for borrowed money when rates were at 0, that's not the part of the world I want to be in. I mean, that is a ghetto in a junkyard. So it's going to be fascinating to watch this play out. I think it's a fucking disaster. I really do.
Yeah.
And it's not followed by real guys. It's not followed by anyone who I think is smart. It probably is owned by guys who are quants.
Yeah, this is one of those names where if you're on the sell side, they give you a crappy name like this where they're doing banking business with them or want to do banking business with them. They know you're going to slap a buy rating on it. You're going to take all the company's bullshit as far as what they're saying real earnings numbers are. And does it look cheap on those fantasized numbers? Yeah, it probably does. But I was floored, and I don't get floored very easily by the difference between what the real earnings number is going to be over, say, a 2-3 year time period. I would say closer to 2. It might even happen faster than that as the consumer hits the wall over holiday and the first quarter of next year. But this is one where we're going to see the company miss. They're going to miss again. They're going to miss again. They're going to guide down, and they're probably going to miss again on that guide down. And they're going to trip whatever covenants they have. And I haven't even played offense here. I can be a motherfucker if I want to be. I haven't even tried on this thing yet. But I have no problems writing letters to the SEC, and I have no problems writing letters to their auditors. I did it on my medics, and the guy ended up in prison. So I'm not saying that this thing is a fraud per se yet, but if they keep playing this non-GAAP game and they keep trying to say they have, pro forma cash flow, EBITDA, it's all bullshit. And I'll call the bullshit out for what it is. But, I've had my hands full with the FTX and the Silvergate and some of this other stuff. But I'm up to no good, and I have no problem
zero problem taking it to the hoop on this thing if they keep it up. If they keep going and wanna play games with investors, no problem.
Love when you're up to no good, Mark.
Taking it to
I'm
the
up to
hoop.
no good. I'm up to no good most of the time. I'm just trying to relax a little bit, but the world doesn't stop for me. That's for sure.
Well, let's talk about Along. Let's talk about Camping World.
Okay.
This is a name. It trades at like what, 3 times earnings. You've got probably one of the best CEOs around, very macro aware, doing a lot of things to his business right now, managing costs exceptionally well, waiting for the cycle to turn, going out there telling dealerships, hey, I'll pay 3 times EBITDA for you, otherwise I'll build a store down the street and put you out of business. And I just love that, and I'll take that all day. You know, we do have this little overhang now. People are worried about, you know, did we overconsume during the pandemic around outdoors and camping? I'm going camping this week, going with my kids. Not that a sample of one matters, but it's really a compelling name. It's one that's generally hated because it's a category that's hated. But it's very rare in my 29 years of doing this that I've seen a business where there is a competitor of one. And that's just a big winner for me when you have a macro-aware CEO who dominates a category. Is there a roll-up element to it? Yeah, there is. That's kind of a dirty word in my mind. So that's probably the only thing I don't like about it. But
then short Helen of Troy against it, because Helen of Troy is a roll up at a crazy valuation with horseshit management, especially compared to Lamonas. Can I talk a little bit about Lamonas?
He's breaking up.
Sure.
So I own Camping World. I've owned it since the COVID deal. I'm pals with David Abrams, who's the largest shareholder outside of Lamonas. Abrams has quite the track record, and when Camping World got to like $5, you know, the balance sheet at the time wasn't any good. I said, can this thing go out of business? He goes, no, I don't think so. Thinks that he has enough, you know, cash flow to cover it. And I said, could you introduce me to Marcus? He said he will. So again, you know, when the market was terrible and everyone thought the world was going to end because of COVID, I called up Marcus and I talked to him and I said, can you go out of business here? He goes, no. He said, we won't go out of business because I have the cash flow and I own land and, you know, on and on and on. And I said, well, people, you know, the rap on you is that you'll overexpand and overdo it like you did a few years ago after he went public and he missed because he did too much too fast. He says, my life is Camping World. My life is this. I am determined to see this thing through. I'm determined to make this thing work. And I am going to succeed. And I think that was 2020. And I thought in 21, you know, maybe he would do, you know, optimistically 250 million in EBITDA. He did close to 900. And Marcus Lemonis is probably one of the best operators I have ever seen and I've ever been around. This guy is driven. He is talented. He is cutthroat. He is mean. He is nasty. He is street smart above all else. And he is determined. He hates to lose almost as much as I hate to lose. And he is determined to turn this thing into a huge deal. And he competes with no one. He competes with himself because they have no national competitor. They have no one on a national footprint where you can buy, service, finance, buy accessories, buy disposables like Camping World. You know, and in every other category, someone has a competitor. Someone has a national competitor that's always leaning on them. And he doesn't. And he will sit there and slowly buy guys in. Geographically, where he wants to grow, he can pick people off. And in the next cycle, in the next up cycle, this guy could make somewhere between $7 and $10 a share easily. And
Yeah.
he pays you.
I'm actually higher than that. I'm at like $11 a share.
Okay. But at $27, we don't need $11 to have the stock be attractive. In the meantime, he pays a $2.50 dividend
that he actually earns. So I'm making $2.50 a year while I wait for people to understand what this guy's earnings power is. And again, I think he is a tremendous jockey. I think he is a tremendous operator. I think Johnson at Overstock's a tremendous operator. I think Niraj at Wayfair is for shit. I think the guy who wears indoor-outdoor glasses at Helen of Troy is for shit. He's not as for shit as Niraj, but he's for shit. But Lemonis is outstanding. And he owns a shit ton full of the B stock. And whenever I turn around, he's always buying more for himself. And he's bought a lot of stock for himself all throughout the move. And again, I think the industry gets a bad rap. And where folks don't get it is Camping World makes the bulk of its money on the lower end of the funnel. And what I mean by that is he makes it on finance, he makes it on sales of disposables, he makes it on sales of stuff, he makes it on warranty, and he makes a fortune on service. And I own two of these. I own a big one and I own a little one. And you need to service these things a lot because a lot of things break. And you're always buying something to get something fixed. And that's where the margin in this business is. And as tough as you may think it is on Lemonis and Camping World, it's worse on the guy who owns 2 to 6 of these things in eastern Iowa, southern Minnesota, western Illinois. For them right now, their business is very, very hard because they have no scale. And they don't make anywhere close to what Lemonis makes on the bottom end of the funnel. And they tend to be family owned. And they would then know that Marcus will always buy them. And they can say, we want to sell it to you at 4 times. And Marcus will say, things are tough. I'll pay you right now 2.5 times. And I think he has a formula. I think he has a process. I think the industry is more disciplined. I don't think it's going to get undisciplined. And I think the stock is great. It's a different dynamic than an overstock. It doesn't have that can catch on fire. Someone can buy them. You have T0. You have other Medici. You have other guys failing. But Marcus Lemonis will knock your fucking teeth out of your head. He would be a bitch to compete with on a day-to-day basis because he doesn't stop. And he has scale, and he generates cash, and he has cash, and he's doing right by the shareholder, and he owns a ton of stock. So what's not to like? I don't want to own anything other than these things. It's just he will just beat the living stuffing out of somebody, and I like that. I like that a lot.
Yeah, me too. So if you had to pick one stock, either Overstock or Camping World, right now today, which one would you buy?
I can't do that. I like Enovix a lot. Look, I'm not in much, so I'm a concentrated guy in these things. If a dividend matters to you, and you want to make $250 while you wait on Camping World, it's very hard not to buy. You buy. Okay, let me quantify this so nothing I say comes back and bites my ass. If you have money in your savings account at Wells Fargo or whoever, and you're making, I don't know what savings pays right now, but not much. I mean, you can buy a 2-year treasury for $4.40. I would much rather own Camping World at $27, paying me $250. Yeah. That's what, a 9% yield. If you can get a 9% yield on Camping World, and I think that dividend is beyond safe, and income matters to you, then you own Camping World.
Yeah.
Because I think you get the dividend plus you get huge appreciation.
Yep.
If you want to grab a Richie Allen bat, a 42-ounce thin handle one where you want to put the ball over the roof of the old Comiskey Park, you own Overstock, or you own the T0 preferred. I have an irresponsible position in both, and I love them both, but I love my kids, and it is what it is. But when you say
Camping World has $11 earning power. They have $11 earning power that could trade at 12 times, which puts the stock at 130 some odd, which is a big move from 27.
Yeah.
But at the same time, you can walk in tomorrow and Home Depot or Lowe's or Target will pay $51.90, $47.50, $63.80 for all of Overstock. And they'll say, we're going to put $1 billion in Overstock to take market share. Wayfair will be at 4. And everyone will say how fucking obvious it was. See, I never knew when FTX was going to blow up. I knew it was going to blow up. Timing in this world is impossible. Everyone's looking for a so-called catalyst. Well, guess what? I can be the fucking catalyst on some of this stuff. You never know. Because as you would say, I'm up to no good. And if you think I'm sleeping at the switch, you're sadly mistaken. Sadly. Because I'm not stopping on any of this stuff.
I don't think anyone at Hedgeye thinks you're asleep at the switch, Mark. Let's. We got a couple of minutes left here. I want to pivot over to some questions that came in. So, Jeremy, why don't you fire away?
Sure. So
let's do a little lightning round here.
Rapid fire. We definitely have thoughts on this. I think we wrote about it in our last Wayfair note. But how do you think about the risk of Wayfair or Bed Bath & Beyond getting bought by a larger company? Kind of like the Overstock.
Slim and none and Slim left town. I mean, you wait for Bed Bath to go bankrupt, and then we'll see whoever wants the assets of Bed Bath. And I know people who have been over the Wayfair business model, who I'm not going to say we're looking to buy them, but wanted to see what it was all about. And it's uninvestable. You wait for them to go bankrupt too, or wait for you can control both Wayfair and Bed Bath through the debt. So I think the equity is worthless. If you want either one of them, you take a shot at the debt.
Yeah, it reminds us a lot of Peloton, right? There's the rumors of that going to be bought last year. It's like companies don't generally buy something where demand is collapsing, there's significant cost issues. You wait until the business stabilizes or gets better. And in that case, I think, like you're saying, that's probably something around bankruptcy for both of those, in terms of when you might want to buy the assets.
So in saying that, here's the one thing I think people sort of need to wrap their head around Overstock as it relates to Wayfair. You can take the Overstock engine and put it right on top of any of these outdoor retailers, and it's an asset-light model where a big cost of Overstock is delivery and moving stuff around. But as a very, very, very smart person who runs a very, very, very large company told me, the home guys, Depot and Lowe's, are very, very good at delivering and moving around heavy stuff. So the synergies you have on an Overstock with a Lowe's or a Home Depot are beyond significant. And they can take that engine, and Overstock is number 4 in online. And one of these guys can easily become number 2, because that would be the end of Wayfair if a Lowe's or Home Depot moved on Overstock. That would be the end of Wayfair. Yep. And they would take Wayfair's share, they would take Bed Bath's share, and they would take At Home share. And they would do it for not much of an investment in Overstock. Now, again, people need to think this through on how this can go. But this is an attractive vertical to a lot of people. You just have to have the right business model and balance sheet to see this thing through. And I think that's the key, and that's what people miss.
All right, time for one more question, Jeremy.
Interesting one here just came in. You talk about Home Depot a lot as it relates to Overstock. Do you have any sort of thoughts on Home Depot, long or short, I guess?
I'm not involved in Home Depot. That's kind of not my cup of tea, but they're a fucking animal. I mean, they know what they're doing. It's very well run. And I mean, competing with Home Depot is like competing with Camping World. I wouldn't wish it on anybody. But, it's clear where their gaps of their game or what their expansion could be. And I think they can see the online business as being a huge vertical, and they'll say, why can't we, or why shouldn't we compete here? Yeah, that's how I would view it.
Well, I guess a closing thought on that. We are short Home Depot. We're doing a deck on this. We're short Lowe's. We're short Floor and Decor Holdings. And we're going to be doing a deck on that next Wednesday at 12:30, day before Thanksgiving. A lot of bandwidth there because no one will be working. So hopefully you tune in to us. Mark, I really want to thank you. You're always a breath of fresh air. Yeah, you've been dead on, my friend, and look forward to talking to you more and trading ideas more. Everybody else, thank you for joining in. I hope you found this informative. It was great from my perspective, and we'll see you next Wednesday at 12:30 on our Depot Floor and Decor and Lowe's deck. Everyone have a great long weekend. Actually, it isn't a long weekend. It feels like a long weekend because no one's working today. We are. Have a great weekend, everybody.